Money Talks, sponsored by Lexus of Las Vegas and Lexus of Henderson.
While there is currently no vaccine to fight COVID-19, the optimism around finding one has sent the stock market surging. I spoke with local financial professional Brad Zucker from Safe Money Advisors to explain what's fueling the stock market despite our current recession. Brad, we've been seeing a lot of optimism on Wall Street right now. We've seen a few dips here and there as well, but why such optimism?
You know, that's true because despite an economy that's been decimated by the coronavirus, record unemployment, and widespread civil unrest, the S&P 500 has erased all of its losses this year. And many states are now easing their lockdown restrictions, reopening the economy, and the government sent checks to millions of Americans with the prospect of another round of stimulus money on the way. But it was the anticipated May jobs report that stunned everyone as the U.S. added 2.3 million jobs as opposed to a potential loss of 8.3 million.
We talked about this before already, Brad, but can you just go over it again? How does the stock market relate to the economy? What's the relationship?
Yeah, well, the stock market can impact consumers and the economy, but they don't always go hand in hand. For example, in 1987, when the stock market crashed, it had little impact on the economy, which actually grew. The S&P 500, the Dow, and the NASDAQ have ended the month of May on a positive note. And many attribute this to states reopening and potential COVID-19 treatments on the horizon.
So there is a rally in Wall Street right now, but what could stop this?
Okay, the spread of the coronavirus has as much to do with the market's direction as anything right now. So if there's a new wave of infections during the reopening, it could lead to new lockdown restrictions and could extend our current recession. Now, normally, the economy is positive during an election year. However, with the unprecedented coronavirus outbreak, now it's a whole new playing field. So if the Democrats take control of the White House and the Senate, business tax rates could rise, meaning less profit. However, the president could affect the stock market by imposing new policies and economic agenda. So historically, party affiliation matters little.
And with all of these in mind, the important question now is, how should we invest our money?
It's very easy to let emotions take control of our money decisions, but consistently investing, whether the markets are up or down, will help curb your desire to sell low and buy back at higher prices later. So if you've had an adjustment in your risk tolerance because of the recent economic conditions, sit with an advisor and start to adjust your portfolio and have more risk-adjusted investments.
All right, Brad, again, thank you so much for your time. We appreciate it. We'll put all of this in KTNV.com. We'll be right back.